Hey guys, welcome back on the channel. Today we're taking a look at some of the main aspects when considering liquidity pools on SUI. We're going to take examples for a high, medium and a low risk pool for yield farming on. SUI is one of the most bullish blockchains right now. They have a ton of volume. They cracked into top 10 of the most heavily used blockchains. We can see that just on DeFi Llama. They're currently ranked 8th when it comes to the blockchain's TVL, but SUI has not been around for a long time. They have been operating for the most part since early 2023. They were just getting started. They still needed to have a lot more testing and basically protocols needed to see if their proof of concept did work, because they are operating with a different language code than Ethereum or Bitcoin or Solana even. So in 2024 it was a consolidation year for SUI, and right now we're sitting in the beginning of 2025 at an all-time high. So there's definitely a ton of different protocols here that are very promising, that will definitely benefit from a bullish run on SUI. If you want to invest on this blockchain, any of these at least top 10, top 15 protocols would be very interesting for you to allocate capital on. Of course, this is not financial advice. Things can be extremely volatile in crypto, but in any case, all of these are reputable, they have utility on chain, and they're helping to build SUI as a whole. If you want to understand how to get started on SUI, I already did a beginner-friendly video telling you how to set up your wallet, bring funds to SUI, and also on another video I showed you the best protocols to yield farm on SUI. So those would be very solid videos for you to understand how everything works, and I would highly advise you to check those out after this one, okay? Now there's definitely a ton of different ways we can search for the best yielding liquidity pools on SUI. We could go here on DeFi Llama even. We could check their DEXs one by one. We could go, for example, on Turbos, which is not the main DEX. The main DEX is Cetus. You see here they have a TVL of over $200 million. Bluefin is also a great option. AlphaFi is a bit different. They apply strategies, several DeFi strategies actually, but on today's video I'm going to specifically focus on liquidity pools. So in order to switch things up a little bit, we're gonna use Gecko Terminal. Alright, so here on Gecko Terminal, the first thing we need to do is search for the SUI network. So right now we're looking at all DEXs, like we are not filtering out pools for specific DEXs. Now we want also to have the highest or the longest time metric. I want to have results for the past 24 hours, which has been generating the most volume. Let's check it out. So it's with no surprise that we see a pool which is made of for a native token SUI and a stablecoin. As an investor on SUI, of course you want to have exposure to this specific liquidity pool, because people will take profits from SUI to stablecoins, and highly likely people will invest in SUI with stablecoins. So this will always be a very highly used liquidity pool. Today the volume is higher than the liquidity. It's also a very interesting pool feature, 0.25%. Usually this type of liquidity pools with a native token of a blockchain and a stablecoin, they will have 0.05% feature. So this is a very interesting one. It's performing really well. And guys, do not miss out on this just because, for example, let's say when you're watching the video, you go yourself and you check this specific liquidity pool and the volume is lower than the liquidity. Don't miss out on such a pool because of that, because this one, long term, this will generate you profits consistently, okay? So it's definitely a pool, a liquidity pair that you want to be on when investing in SUI. The second pair, it's the same thing. And the volume is also double than the liquidity. So it's even higher, the volume to liquidity ratio, it's even higher than only the first. So if we want to see the differences, because these are the same liquidity pair but are on different liquidity pools, we'll click on each of these and open in a different tab. So the first one, this is on Cetus. Cetus, like we just saw, it's the main DEX, and this one is on Bluefin. And this goes to show another thing, guys. It's always good to have exposure to the same liquidity pair in different pools. Sometimes one will perform better than the other. This one is ranking second because we ordered things out by volume, but the volume to TVL ratio is better. The pool feature usually is the joker. For example, this one is 0.2%, which is slightly below 0.25%, but the volume to TVL ratio is much better on this one. So this is performing better overall, although they will be performing very close. Another example we have here, ranking 5th. So this has a very low, so to say, pool fit here compared with the first couple ones, right? So it's 0.05% pool fit here, which is 4 times lower than this one and 5 times lower than this one, the first ranking pair, right? So in order for this to be generating rewards on pair with these couple other liquidity pools, they will need to have a much higher volume to TVL ratio, which seems to be the case. This is virtually 5x over the liquidity. So overall, this liquidity pair is pretty much working on pair with these ones, okay? And by the way, let's check out in which liquidity or DEX is it operating. So this is also on CETA. So we just got 3 different liquidity pools for the same liquidity pair, 2 on CETAs, 1 on Bluefin. And overall, like I said, I think this is the staple liquidity pair for anyone who is bullish on SUI, who wants to grow their SUI bag and be exposed to overall on-chain volume. Because if there's some bullish news on SUI, this is the first pair that will reflect those bullish news. Like if there's a protocol deploying on SUI which has high hopes, there's some real world assets that do adopt SUI, all of those bullish news will reflect themselves in this liquidity pair. Doesn't really matter in which protocol it is, all protocols overall will reflect that bullish impact of those news, okay? But of course, CETAs, Bluefin, the biggest DEXs, even Turbos, they will always be the first and the ones who have the most impact on it, okay? So this is definitely a liquidity pair that I would consider to be a staple in my SUI portfolio. And if you keep scrolling down the list, we'll find the same liquidity pair in other liquidity pools. Like for example here, ranking 13th, also with a really nice volume to TVL ratio. Another one down here. So you get the idea. There's plenty of these liquidity pools. You can choose one, of course, but it's always a good idea to have exposure to at least a couple, and preferably in different DeFi protocols actually. So I would choose one on CETAs, one on Bluefin at least, okay? Then we have the DEEP token paired with SUI. DeepBook is a very interesting protocol. They're aiming to build liquidity on SUI. So as SUI grows as an ecosystem, as a blockchain, and becomes more adopted by more people, more active users, it's natural that DEEP will also grow. And that's why also in the videos that I previously mentioned here, specifically the ones about yield farming on SUI, I did quickly mention DEEP. It's a very interesting protocol because of that. And if you look at, for example, what's happening on base chain with Aerodrome, Aerodrome is meant to be the liquidity layer on base. So you can kind of like see where DEEP is going also from the success that Aerodrome has on base. It doesn't mean that everything will work out as planned, of course. I've seen plenty of crazy things happening in crypto, in DeFi, but in any case, I would consider this to be a medium risk type of pool, and they're performing quite well right now. DEEP, I believe they are sitting at an all-time high. Actually, let's check it out here on CoinGecko. 28 cents. Yeah, so we're pretty much sitting at an all-time high right now. And that leads us to one very important aspect. If you want to provide liquidity to this token, you highly likely, since we're at an all-time high, you highly likely want to protect yourself from an eventual token going down, depreciating in price. So if you want to set ranges, we see that the chart has been chopping sideways for the past 5 days. So either this becomes the new floor, or possibly it can go back down a little bit. So it's good for you to always take that understanding and reading the charts, reading the markets before setting up ranges, okay? But in any case, I would protect myself against the possible price depreciation, set up a lower risk at around 15, 20 cents, maybe something in between, because we see that there's somewhat of a floor here in between 15, 17 cents that went on for the beginning of the month. So if you go here with the daily candle chart, we can see that even during December, the chart was chopping at around 10, 12 cents. So that was a floor back then. So it wouldn't also surprise me that the price comes down from an all-time high and we see some sort of correction ongoing for the near future. So overall, I would consider this to be a medium risk type of pool. We are getting exposure to SUI, also to DeepBook. Checking the correlation metrics here for the past year, SUI and DEEP, this is very close to -1, which is the worst case scenario. In any case, for the past month, the scenario is a bit better. It's on the green right now, and for the past 7 days, it's much better. And overall, that's why I was telling you, consider this to be a medium type of risk liquidity pair to provide liquidity on SUI. Then let's keep going here on the list, see what else we have. There's definitely some also other risky token pairs here. AXOL, I believe this is a meme coin. Hippo, this is a meme coin that got itself established on SUI. They have TVLs of over $2 million, very close to 3 million. The pool fee tier also reflects that stability, it's 0.25%. But in any case, it's still a meme coin. And me personally, I would always consider meme coins to be extremely risky. We have Cetus paired with SUI. Cetus is also, I would consider, a medium risk type of pair, Cetus paired with SUI. Because after all, we are talking about the native token of a DEX, which is usually paid out as incentives for specific liquidity pools, and it will experience market dumps from users who are just going to take profit. But of course, Cetus being one of the main protocols and definitely the main DEX on SUI, this is something that me personally I want to be exposed to, and also that's why I consider it to be a medium risk type of pair. It can easily go both ways, you know? So in any case, I want to be exposed to the main token of the main DEX right now on SUI. Also, when it comes to stability, let's not forget about stable pairs, and we have VoloSUI or VSUI, which is a liquid staking derivative of SUI. So these tokens will always be, SUI it's a native token of the blockchain, right? And VSUI it's going to be pegged to its price, to the price of SUI. So this is going to be a much less riskier type of liquidity pool, and the same thing goes for pools that have stablecoins. Like for example, here we're having USDC, couple pairs of USDC, different versions of USDC, and also USDC paired with another stable coin, which is USDT. As you can see, the pool fee tier, it's going to be at the lowest, 0.01%, because it reflects the stability of these pairs, of these tokens. And since the risk of impermanent loss is going to be at the lowest in these type of pairs, we also see these very low pool fee tiers. And the same goes for any liquid staking token of SUI paired with SUI itself, right? There's also going to be HA-SUI. Let's see if we can find it here on the list. Now we can't, at least not in the first page, but you get the idea. Any of these legit liquid staking tokens, HA-SUI, VSUI, will also be very low risk type of options for providing liquidity. Then we also have Blue paired with SUI. Blue, again, I would consider this to be a medium type of risk liquidity pool just because of the same reasons I mentioned about Cetus. Blue is one of the biggest DEXs on SUI. They are a trading protocol that was operating on Arbitrum, and then they decided to deploy on SUI, and they had tremendous success. When there's a lot of demand in terms of transactions on chain, they don't choke, they don't lag, they don't crash, they can handle all that pressure tremendously well, and that's why Bluefin decided to deploy on them. So there's going to be also very interesting concentrated pools here on Bluefin. Don't miss out on the incentives. You can see there's a ton of different pools here being incentivized. So for example, if we see something like SUI paired with USDC, and this specific one is being incentivized, I mean, it's a no-brainer. The 24-hour APR is very close to 200%, so it's triple digits APR. Then we have a stablecoin pair with incentives paid in blue, double digits APR. Deep paired with SUI, very high triple digits APR. So overall, great options, not only because we're talking about very interesting liquidity pool pairs, but also definitely because of the incentives. And then of course, let's not forget the staples of DeFi. Wrap Bitcoin paired with the stablecoin. It's even getting incentivized with SUI here. Triple digits APR, very interesting option. And we can also find others like Solana. Wrapped Solana paired with ST-SUI, a liquid staking derivative of SUI. Ethereum also paired with the stablecoin. So you can even have these blue chip liquidity pools that are not necessarily linked to SUI, but still they're big assets in the crypto markets, and we can get exposure to those on the SUI blockchain as well. Also in the low risk liquidity pools, I would consider NS paired with SUI. NS is a service for owning your own names on chain for SUI. So it has utility, and it's a liquidity pool that has been performing quite well for the past few months. And of course, looking at the higher risk stuff, we gotta look at the meme coins, Lofi, AXOL, Hippo, S, Agent S. I'm not sure if this is an AI agent or not, but recently there's the AI agents narrative also showcasing on Sui. Blub, another meme coin, Suimon. When going into meme coins, we are always going to be into very risky territory. So unless they reach to the $1 billion market cap, I would always consider them to be high risk. And even if they reach the $1 billion market cap, I would check out on those pools every day at least. There's always going to be tremendous volatility when we're talking about meme coin stuff. So let's jump in here on Turbos, which is a different DEX. I covered it on the channel very briefly before, but they are very interesting DEX. They also allow us to play with concentrated liquidity. So you have here light version and the pro version. The pro version gives you access to set up your own ranges, right? Your concentrated liquidity ranges. While the light version also allows you to do that, but they have a predetermined APR for you to deposit your funds with. So you see the current range here right now for this pool, 3.6 to 5.3 USDC per SUI. So this is the bottom range, $3.68 per SUI, and this is the top range, $5.34 per SUI. You can go full range if we toggle here this check mark. You go full range, the APR drastically goes down, but you don't have to worry about a thing. You don't have to worry about being in and out of range. It will generate you fees non-stop. You will still be exposed to impermanent loss. So you see here pool composition. The pools will always try to find balance when it comes to having a specific number of SUI, which is worth a specific amount in the market, a specific amount of dollars, and that amount of dollars worth of SUI needs to be the same of the dollars which are present in the pool but in USDC. So if SUI price goes up, the pool composition will see the number of SUI being lower and lower and more USDC in it. And just because the pool is trying to find that balance to have both assets still, but they will be present in the pool with the same value. So if you want to think of it as having a bag of SUI, which is worth the same thing as a bag of USDC. And the same thing goes if SUI price goes down, there will be a growing amount of SUI tokens in the pool composition because now we're needing to have more of an asset which has a lower price. So in order to even things out in terms of value, we need more SUI in order to even out with the value of USDC present in the pool, okay? And the same thing goes for when you set up liquidity pool ranges. Your range is going to be a mini liquidity pool. So if you go out of range on the upside, you'll be holding 100% USDC because all your SUI was sold for it. If you go out of range on the downside, you'll be holding 100% SUI because all your USDC was sold for SUI. Basically, it automates you buying the dip when the price goes down and also selling for a profit when the price goes up. So if you understand how a pool composition works, you do understand how your personal mini liquidity pool, which is your range, will also going to work, okay? But if we want to set up ranges here, we would need to see how SUI has been performing. So let's take an example here with the liquidity pool on Gecko Terminal. This is the same liquidity pair, so it doesn't really matter. We want to switch up the toggle here because we want to watch the price of SUI, of course. The dollar is always going to be $1. And now we need to read the charts here to set up ranges. So let's go with the daily candle. So for example, we see with the daily candles that the price has been, since December up until now, we are hovering around the $3 mark to the $5 mark, so to say. So this would be a decent range, back tested for a whole month. So knowing that, we can come back here on Turbos, click the Pro tab and switch it to Pro, and now we can have a $3 as a minimum and as a maximum $5 range. So overall, we can see that we're having an upside range of plus 13% from the current price, which is the white line, and minus 32%, which is the downside from the current price. This would come up with an APR of 117%, and it shows us also the deposit composition, which is roughly 25% of SUI and 74% of USDC. And that's because of the margin that we have here from the current price up until our upper range. This margin is 13%, which is much shorter than we have on the downside. That's why we have less percentage of SUI being deposited. Everything that we deposit above the current price will need to be on SUI, will need to be deposited with the SUI token. Everything that we want to deposit below the current price will need to be by using USDC for this specific pair, okay? So if let's just switch things up here so you can see the difference. So now we're having a shorter difference on the downside and a wider difference on the upside. And that translates here on the deposit composition of we needing to deposit more percentage of SUI than of USDC. Okay, so I hope this clears things out for you guys. It's also worth noticing that we are currently at an all-time high when it comes to the whole SUI ecosystem. We can see that just here on the DeFi Llama chart, right? And of course here on the SUI price, we can see just that. Let's go full screen so you can have a better idea. So yeah, SUI is pretty much very close to all-time high. So it would be a good idea to be protected at an eventual price depreciation, because the number one thing I want as a liquidity provider is to be generating fees for the most amount of time. If you guys are having your positions out of range very often, highly likely you are just playing with very tight ranges. You're being greedy, you're chasing high APRs. But in the long run, you'll earn more if you let your position to generate you more fees for the longest amount of time versus something that is in and out of range very often, okay? So I know as a beginner, it might be very attractive to see high APRs and you want to deposit and earn 1%, 2% a day. But it's better to start with wider ranges. And this one is very close to 50%, as you can see. So we could even go to -30 plus 20, something like this, or even below this, like having something like that, a little bit below $3 in the minimum and a little bit above 5 on the maximum. Mainly it's all about mindset. But what I usually see beginners to make the mistake is price goes down, they look at the chart, everything is red, they deposit at an all-time high, now their deposit is being worth less and less. It goes on their downside and then they sell at a loss. They lock in permanent loss. You want to avoid that. And especially when you are looking at a pair such as this, you are holding SUI. Even if it goes out of range on the downside, you are still holding 100% of SUI. So what you can do is that instead of locking in impermanent loss and rebalancing, you just lower your range to be slightly above of the current SUI price. So let's say, for example, we were having this range, price went down, now we're out of range, and if we readjust things and put again 50-50, we will lock in impermanent loss. So we don't want to do that. Because think again, don't act emotional. Think again, you're holding SUI. You're holding the native token of a blockchain which is still growing, right? So what you could do, you could come here and widen up this lower range to slightly mid SUI, or even touch it a little bit like this, you know. You're just readjusting your position a little bit. You'll lock in a little bit of impermanent loss still, but not all that much. And you can leave it the upper range like this, or you could move it back a little bit for higher APRs. Of course, I don't advise for that, but it could also be an option. You can also do that. The thing is that if you do that, you'll have higher APRs, but then if the price bounces back up, not only you'll miss on possible volume that it will be generated above your maximum price range, but also you had sold all your SUI for USDC in here. And if you want to readjust your position again, you could have profited a lot more with your SUI. That's all that I'm saying. Okay guys, I'm going to wrap this one up. I hope this brought value to you. If it did, hit that like button, subscribe for more of this type of content. If you want to know more about yield farming, check the links in the description for the Underdog investor group. My affiliate link will get you 20% off on your first month. They are a yield farming dedicated community. There's free resources and a bunch of other stuff that users can benefit from being part of the group. In any case, if you have questions, let me know in the comments. I'll get back to you. Thank you for watching. Take care. I'll see you on the next one.